Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, we've just released a monthly India market outlook titled Staying Balanced. My name is Ravi Singh. I'm the Chief Investment Strategist at Standard Chartered Bank India, and I'll be your host for this podcast. Indian assets have maintained their strong momentum thus far in 2024, supported by strong domestic growth momentum and corporate earnings performance. Also, government continuity in the recently concluded general elections and broad policy public priorities have supported risk sentiments. Earlier this month, volatility surged in equity and FX markets as news of deteriorating economic indicators in the US and a surprise policy tightening by the Bank of Japan dented risk sentiments. To understand this in more detail and how investors can navigate, I have with me Mr. Vinay Joseph, who heads the investment products and strategy at Standard Chartered India. Hi Vinay.
Hi Ravi, thanks for inviting me.
So let's get to the most pressing question today. The sudden surge in market volatility and FX markets has caught investors off guard. Could you help us understand this a little better?
Well, yes, that's a great question to begin today's podcast. To put it simply, we have seen a confluence of three factors that has driven the surge in global volatility, and this has caught most investors by surprise. First, the current earnings season that runs from April to June of 2024 has been broadly steady on a quarter basis, but some major tech sectors have disappointed on earnings performance, leading to investors questioning the sustainability of this AI-powered rally in markets. For example, the Magnificent 7 stocks and the high-end chip manufacturers and semiconductor plays. Second, after a very strong set of numbers on US economic growth and declining inflation over the last couple of months, the recent contraction in manufacturing PMI and more recently the decline in the jobs data as well as rising unemployment data surprised investors, challenging the soft landing scenario which still is our base case. Finally, the most important is the Bank of Japan's recent move to hike policy rates by 15 bips and tapering the quantum of monthly bond purchase. This has led to the yen strengthening sharply against the USD. As yen is the favorite currency for carry trades, a sharp strengthening has triggered losses in current positioning and unwinding of trades globally. We expect the current volatility to remain elevated in the near term as markets get more information on growth and follow up on central bank policy actions, which is going to be quite crucial in the coming few weeks.
Thanks, Vinay. Well, that was more on the global markets and what has caused this volatility. Now, coming closer home, what does this mean for Indian investors? How can they navigate the market uncertainty in the near term?
Well, over a 1 to 3 month horizon, we see risks of a pullback in domestic equities, given slowing earnings growth, potential slowdown in major economies, and significant event risks. We shouldn't forget there is elections in US and in key states in India. In our view, a prudent approach will be following the below 3-step, which can help you tide near-term uncertainty. First, on an overall asset allocation, we are neutral on equities. Now, we have seen a very strong rally in Indian equities, and this has been supported by strong domestic growth and very strong corporate earnings delivery. But similar to US, in India also, Q1 fiscal year 2025 earnings season has been lackluster. The Nifty index profit as of date has only grown 5% year on year. This is the slowest pace in the last 7 quarters. Sales growth or revenue growth has also been muted at just 7%. This has to be dovetailed with stretch valuation premiums. Nifty index 12-month forward PE is at 21 times, much higher than its 10-year average of 17.9 times. This leaves very little room for disappointment on earnings, given delivery, what we have seen in the past, as well as moderate earnings expectations in the coming year, where the Nifty index is forecasted to grow just around 10%. Second, bonds becomes a very crucial asset to hedge against slowdown, and the yields are also attractive. Despite the sharp decline we have seen in bond yields overall in India also over the past month, the risk reward is still attractive. The key point here is that we have seen an improved demand-supply dynamics. It's a very strong tailwind for fixed income, as we get steady inflows from both domestic and foreign institutional investors from the index tracking flows. We retain our preference for medium and long maturity bonds given still attractive yields and the potential for higher price gains as yield declines with interest rates coming lower in the second half. Lastly, and the most important, diversified asset allocation remains the key. A balanced allocation comprising neutral allocation to equities, bonds, and cash still remains the most prudent strategy to tide through the near-term uncertainty. Within this, don't forget about gold. It remains a solid core holding. The recent correction in INR gold post the reduction in custom duties actually offers a very good opportunity to add to this asset class. Given overall tight demand-supply balance globally, our expectations of lower bond yields in India as well as globally, and increased domestic demand for gold ahead of the festive season. Recent data also points to these trends improving.
Thanks, Vinay, for sharing the views on how investors can tide through the near-term market uncertainty. That's all the time that we have for today. Thanks, Vinay, for being on the podcast.
Thank you, Ravi.
Thank you, listeners, for listening to the podcast. And as always, if you like the podcast, please like and subscribe. Do reach out to your relationship manager for a copy of our India Market Outlook titled Staying Balanced. You can also find it in the SC Invest section at the following address: www.sc.com/in. Thanks very much.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.sc.com/in.